Hey everyone, Coach Investor back to another video for today. So in today's video, I want to talk to you about the company that has actually outperformed most of the stocks I own in my stock card portfolio, which you can follow for free. Link will be down in the description below. And that company is called Funko, the ones that are making these type of guys, which is Bobby Axelrod and Chuck Rhodes from Billions. Now, obviously, they make much more than just those two figures. We're going to talk about all of that in this video. But for example, a major overview here by the numbers from their latest earnings report. They have over 1,000 active licensed properties with over 200 content providers as of the end of 2021. It takes a minimum of 70 production days from concept to completion, and they have over 750 million pop culture products sold since inception. And like I said, it's one of the best performing stocks in this portfolio on StockCard, over 30% returns as of now. I believe a week or so ago, obviously when the market rallied, it was a bit more than that. But as you can see right here, the card itself does not look that bad at all. High growth potential, stable operations, calm investor sentiment, same return at the market, even though I'd say it maybe outperformed the market. It's a fairly priced stock, and then for the analyst, 4 buy and 3 hold. Now, as for the analyst price target, that sits at close to $30. Right now, we're at 22.60. As you can see in the past year, it's up close to 15%, whereas the overall market, can't lie, is probably in the red. Now, in the last 5 years, that's up 222%. Obviously, it has a huge drop here when, well, the March crash happened in 2020, and then it rallied up. And you can see it's actually, every time it peaks there at $26 or so, it drops again. But if you're looking for a very small-ish company to add to your portfolio that is having, well, a great time in the market, even in this economic environment, they have a market cap of just over $1 billion. Yes, it has a PE ratio of 21 and a price to sales ratio of under 1, because as you've seen before, well, they generated over $1 billion in revenue. Now, by the end of this video, you'll understand why I like this company so much, not just the product, but the company itself is very well positioned, because most, let's say, toy making companies or companies that are well involved in pop culture are usually, well, seasonal, cyclical, let's say. They only make a lot of money in a short period of time, usually at the end of the year during the holiday season. Now, as you will see with Funko, that's not the case at all, because they say here it is built on the principle that everyone is a fan of something, which to me, for them, now that they've built up the company and the reputation, is a huge moat, because this means that it doesn't matter what period during the year we're in, they can come out with a product that someone would like. As you can see right here, movies, TV, music, sports, anime, games. I'm sure at least one or two, probably many more of my viewers are fans of one of these brands. Now let's first look at a couple of financial metrics here. So net sales increased 33.7% year over year to $315 million. Year to date right now, they sit at 624, and that's up 46.7%. As for gross profit and gross profit margin, as for margin, that's actually down. We're going to talk about that in a bit. But as for gross profit, that's up 11.7%. Income from operation and margin, that's down. Same reason as gross margin. We're going to talk about that a bit later. And so, active properties and net sales per active property, you can see that it has increased. Net sales per active property is up 39.5%. Active properties, that's down 4.2%. Now, year to date, both of them are up, but active property are just up 0.1%, whereas net sales per active property, that's up 45.9%. And this is very important what they say here underneath. Funko is built on having a large and diverse set of licenses with the ability to leverage evergreen content, which means putting out, let's say, one of those figures, and then doesn't matter, a couple of months from now, it can still sell a lot. Evergreen content on YouTube is the same, probably music videos and stuff like that, things that aren't time sensitive. And they show it right here. Evergreen properties accounted for 63% of sales in Q2, whereas the top property in Q2 represented 6% of sales. Now, obviously, their biggest market is the United States, then it's Europe, and Europe actually a couple of years ago, Funko didn't really have such a big presence, official presence, let's say, in Europe. It was mainly through retailers, or you had to buy from a company called Pop Culture, which is based in Australia. Now, as for different categories from each business, so the core collectibles, like the figurines I've showed you before, that increased 21.3%. Loungeflies, which is, let's say, backpacks, for example, that segment increased 114.3%. Huge success in that segment, also didn't really exist in the portfolio a couple of years ago. And then the other segment that increased 11.6%. Now, as for the decrease in operating income, margin, adjusted EBITDA, etc., it has all to do with inflationary supply chain pressures, as well as in-quarter expenses related to their distribution center relocation and ERP implementation that drove a decrease in adjusted EBITDA and adjusted EBITDA margin. The same can be said here for adjusted net income. And as you can see, this is a big, let's say, negative here, the huge increase in inventory. So we've heard that before, right? Big retail companies as well, building up inventory, which isn't great. We've heard that, I think, lately with obviously with Nvidia. So this is something to keep an eye on. Now, as for the liquidity overview, that has been decreasing as well quarter over quarter. They say here that the liquidity declined year over year due to the variability in quarterly cash flow, greater working capital needs due to supply chain disruption, near-term infrastructure investments, and an in-quarter acquisition, which was this one right here, the high-end collectible company called Mondo. And yes, for those that are maybe a bit interested in that, they also have an NFT collection line, although that's not really that big. It is most of the time selling out. Now, I hope that by now you understand what the company is doing, how well they're doing, and why I'm actually excited of having that company in the portfolio. Now, obviously, I do have lots of their products, so I'm helping, let's say, the cause. But don't just look at what I'm saying or hear what I'm saying. Look at this right here. By the way, I'm here on Seeking Alpha in my portfolio. I showed you this in the last video as well. By the way, if you want the premium subscription for Seeking Alpha, which is great value, I have a link down in the description. It's 50% off until the end of the month. So go and check it out, and then you can create your own portfolio and you get this basic but great overview. So Funko, right? Seeking Alpha author scores. Obviously, this is subjective, but it is a good score. Wall Street, also a good score. Quant score, good one as well. Valuation grade, a C, because we've seen the high-ish PE ratio. Growth grade, B+. Profitability grade, C-. Momentum grade, A+, which is always great to see. And then EPS revision. Unlike many other companies we've seen this quarter, this one has still a B+. Now, when it comes to earnings, they did surprise on earnings per share by 4 cents and on revenue as well by $21.75 million. And so, what do you think about Funko as a company? Do you think it has a place in your portfolio? Do you hold, maybe you hold it in your portfolio? I actually never asked my viewers that question. Or maybe you have one of those Funko Pops as well in your house. Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye bye.